Who is gold's #1 enemy? The dollar. And as Sun Tzu said, go check it out. To win a war, you have to know your enemy well. That's why I always start with the dollar. But first, I have to pick the right instrument. The DXY is a synthetic index, calculated and with no real volume. For order flow, it's blind. The ICE future DX1 would have real volume, but I don't have it on my account. So I use the USDX, the broker's CFD. I don't trade the dollar. I use it as a macro compass. And for direction, structure, and levels, it gives me everything I need. Let's start from the top, from the monthly, then move down to the weekly, the daily, the 4-hour, and finally the 30-minute. On the monthly, the dollar came down from its high at 109.99, dropped all the way to 95.34, and is now climbing back inside the rising channel. Two key levels, 101.796, the last low I'm testing right now, and above it, 103.739. The next target. This is the frame I read everything else within. Let's move down one level to the weekly. Here I see the dollar building an accumulation base, my yellow box between 97.3 and 100 after the drop from 110. Now it's breaking out the top and testing the 101 to 101.55 area, my 100% Fibonacci. The levels I'm watching are the cluster between 99.45 and 99.95, the 50 to 61.8%. That's the decision zone. Above it, long structure confirmed. Below it, we go back into the range. My scenario, that red zigzag line calls for a pullback toward 99.7 to 100 before pushing up to 101.5 and beyond. And to me, it's more than likely, if it's true, and it is, that the market moves in a zigzag by nature, never in a straight line. Then a retest of the top of the box as new support is the most natural development I expect. Translated for gold, as long as the dollar holds above 99.95 to 100, I've got bearish pressure on gold. But if it drops back below 99.45, gold breathes. Let's go down one more to the daily. And here the structure gets beautiful. I see a clean sequence of bullish flags, one after another. Each flag is a pause in price that then pushes back up. The classic move of impulse and pullback, but all in the long direction. I measured the last flag. Each impulsive leg is worth about 2.27%. That's 2,274 points. And here's the beauty. Projecting that same measure from the current flag, price takes me exactly to my scenario, 102.675. There's only one obstacle in the way. The last low from May 12, 2025 at 101.786. That's the level to break. Once that's taken out, the flag projection toward 102.675 is fully open. So the daily confirms the weekly, long structure, flags in continuation, and a clear target at 102.675 if the dollar breaks 101.786. For gold, this means that as long as these flags keep pushing up, I stay with bearish pressure on gold. Now let's get into the setup. On the daily crossed with the 4-hour. After the high at 101.546, price is pulling back inside this bearish channel, the red line. So in the short term, I still expect some more downside, a pullback that walks price lower, but down to where? Right into my OTM zone, the optimal trade entry, that blue box. And there's heavy confluence there. The VAH at 99.677, the 55.9% at 99.715, overlapping it, the 61.8% at 99.96 above, the 50% at 99.47, and the POC at 99.130 below, all packed between 99.4 and 100. So the plan is, first I let the short run down into the OTM, then right there, I wait for confirmation and go long toward 101.5 and 102.675. Underneath it all, the rising trend line from 97.4 holds. As long as it holds, the picture stays long. And for gold, a dollar restarting from that zone means I keep working it short. And we get to the last time frame, the 30-minute, where I look for the fine execution of the short. Here, price is climbing toward the top of the range, toward the 100% at 100.776 and the POC at 100.750. But I'm expecting a rejection from there. My idea is a small push into those levels, and then the short, that red line dropping down. The short's target is my scenario at 100.560, which sits in full confluence. The 55.9% at 100.590, the VAL, the value area low right below it, and the OTM zone, the optimal trade entry, where I wait for price to turn long again. So the complete plan, all time frames aligned, is this. First, I let the dollar drop with the short down to 100.560 into the OTM, where VAL, Fibonacci, and POC all line up. There, I wait for confirmation and go long toward the targets I saw on the daily, 101.5 and 102.675. And for gold, the message is clear. As long as the dollar runs this playbook, I stay ready to hit it short on the bounces. Eagles, that was my complete analysis of the dollar, from the monthly all the way down to the 30-minute. If you liked it and found it useful, I'd really love to have you with me on my new YouTube channel too. You'll find it at youtube.com/@Aquiliriali. Subscribe so you don't miss the next analyses. See you there. Royal Eagles, born to fly, born to dare.